The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovably soft, and squeezably soft host, David White. It is July 17th, about halfway through the summer, it seems like, and weather's actually turning just a little nicer out here. It's been hot and rainy for a couple of weeks. Last couple of days, at least the breeze has come in and temperatures dropped a little bit. Still tends to rain every day down here. One of the rainiest days. The last 2 years been very rainy down here. But a nice day, a little cloud cover. And cool, and the humidity's dropped, so maybe the worst of summer is over. On this day in 1955, Disneyland, Walt Disney's metropolis of nostalgia, fantasy, and futurism, opened. And the $17 million theme park, kind of hard to think that you can't build a single building now for $17 million, but you could build an entire theme park for $17 million. I was there, it had to be, 1970? 1970. Spending my first 10 years in Hawaii, coming back, and of course the first thing that we did was when we got off the boat was take the giant caddy. My dad had a 1965 Cadillac two-door. Boy, what a car! What a boat! Anyway, we took it and we drove right to Disneyland, and that was it. We got off, I think, about 8 o'clock in the morning off the SS Lurleen. In fact, if you go to Hawaii and Honolulu and go to what my brother said was the, I guess it's the Visitors Bureau. It is the stern of the ship is, I guess, in there. The SS Lurleen. Anyway, first time I could remember going anywhere. My first trip was at 3 months old, and my next trip was at 10 years old. But interesting nonetheless. So anyway, Disneyland hosts more than 14 million visitors a year who spend close to $3 billion at the joint. And I guess it's still the rite of passage for anybody with a few bucks they can scrape together to go to either Disneyland or Disney World. And, of course, I think I went to Orlando so many times, I just got jaded for conventions. Same thing like Las Vegas. Just doesn't hold any thrill. If you're there 8 weeks a year, probably not a big deal anymore to go to Disneyland or Disney World or Las Vegas, at least for me. But I guess it's still the rite of passage if you have a 5 to 10-year-old, the first pilgrimage to Mecca as a child. But still interesting. I had a choice between doing this one and the one where I was probably going to get mad and angry because on this day in 1935, the first parking meter was also installed. And, of course, this is probably a lot more cheery article than the device that most politicians use to rape its citizens on almost a daily basis, especially if you live in a big city. These things are there just to torment the people that pay taxes for that city. Anyway, I digress. I said I wouldn't get into it. Anyway, we've got a market that is a flat, and I figured it would be flat, going to be flat for a while. You know, we're up 5 points, almost 6 points, 2.2 billion shares, so not a lot happening so far. Of course, Ben Bernanke came out with his testimony at 8:30, pre-packaged, then went into a few things. But, seeing gold off a little bit. But for the most part, not a lot happening in many other parts of the market. And we'll continue to take a look at this. But, in the commodities space, gold's off $14. Silver's off 56 cents. Platinum's off $13. We're down, 58 cents? What is that going to be? $3.12 on copper. It's going to be about right. And, of course, we've got a lot of other stocks not moving at all. A few stocks moving. We're going to get into that a little bit later. But I think basically what we're looking at for the rest of the day is hurry up and wait, and that is IBM, Intel, many other stocks after the bell. And everybody's just holding their breath today. Tomorrow, I think it's Microsoft and other biggies, but Intel, IBM tonight. And it's going to be very interesting to see. I suspect IBM made its numbers by firing a ton of people just before the deadline from last month for the quarter. But it'd be very interesting to see how these numbers come in. The stock looks horrific. It looks like it could fall apart, but we'll have to see. But I suspect we're probably going to have a lot of action on Friday after earnings on Thursday night. But the euphoria continues on in the market with almost no fear as long as the Fed can print and tosses money around. Some of the bigger stocks out there not really moving that much. Some of them are getting a little bit of repair that got really hit yesterday. Anyway, we're going to get into the news a little bit. Chairman Bernanke speaks. He says, I emphasize that because our asset purchases depend on economic and financial developments, they are no means on a preset course. On one hand, if economic conditions were to improve faster than expected and inflation appeared to be rising decisively back toward our objective, the pace of asset purchases could be reduced somewhat more quickly. Anyway, you can get a lot into that, but who knows. Housing starts reported a disappointment this morning with total starts at basically 836,000 rate historically. From about 1950 to 2005, the average was about 1.5 million new houses a year. So we were about half at the historical run rate. Single-family permits were at their highest level since May 2008. My guess is that was a lot of people sneaking in just before the interest rates spiked, and all these people were trying to get in at the lowest rates. So probably going to have a lot of houses delivered late this year, normally somewhere between 9 and 11 months to build a house. But I think the prices of the home builders probably shows the future the best. CPI increased 0.5% in June. The core was just 0.2%. But, of course, I don't know anybody that doesn't use fuel or eats food. So the old core, kind of nice, but the idea that that 0.3 that they discount probably was the same thing. Other things. Apple, there's a nice article about, kind of carries on my theory, where Apple was saying they were going to get all this business from China. And I said, not so fast. In Russia, 3 big carriers that provide 80% of the country's 180 million mobile subscribers. None of those carriers support the iPhone anymore. They've been dropping off. And this was somebody at Fortune that wrote the article. There is a critical error with companies like Apple. And opposed to other companies, namely Android. The Android operating system is public. You can download it. You can compile it yourself. And basically, authoritarian states like Russia and China love this. They can look at the code. They can find out where backdoors have been put in. and they dislike companies like Microsoft that won't let them see the code behind what goes in there or recompile it themselves. That way, almost all phones, about 95% of the phones now being sold in Russia are Android phones, and the same issue in China. That is, if you won't show us our code, we're not going to be letting anybody buy your device in our country. And kind of interesting, but the Russians are saying "niet." So a little bit more of what we expected out here. Apple doesn't seem to be moving on the news, but not a real big surprise. Jim Chanos is at the Delivering Alpha Conference, which is a big dog and pony show put on by CNBC. He actually put the name Destroying Alpha as the title for his speech, and he is going short Caterpillar. The global commodity super cycle is over, he says. China is slowing down, and Caterpillar is, quote, in the wrong business at the wrong time. Jim Chanos, an excellent short seller over time. Not one of these guys that's wrong or right in the next few minutes. Normally, it takes a while for his shorts to pay off, and he's more than willing to give it some time. If you look and saw what happened to Caterpillar midday, when the first titles for his slides came out, and it showed that he was short Caterpillar at almost 12:30. It popped down a couple of bucks almost instantly. So kind of interesting. Anyway, we've got another minute here. Just wanted to make sure that everybody would give me a call at 877-927-6648. That's 877-927-6648. And this Z in the Den says Chanos thinks it's fraudulent accounting by Caterpillar for the Bucyrus buyout. For those who don't know what Bucyrus was, this was the company that Caterpillar bought right before the president decided to kill coal mining. And probably an inauspicious buy for Caterpillar, and probably they paid too much. And I suspect there is some accounting I can't even say it, irregulatories. I'll think about it during the break. Anyway, he thinks that there's some problems about fraud in the Bucyrus. But these guys made these giant, what they called drag cranes. And what they did was this giant scoop would be dragged across the ground and just dig up all the coal, a la strip mining. And, of course, the war on coal by the administration is basically decimated all those coal companies. And not a lot of reasons to have a wonderful drag mine company unless you're doing strip mining for coal. Be back in a minute.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yeah, we're going to go ahead and start looking at some stocks. And normally, in fact, we'll probably do it right now. See if I have just a second here. To go through how the rest of the world was trading. Do I have that? Yeah. Yep. The UK's FTSE was up 0.2. Germany's DAX is up 0.7. France is up 0.6. Spain's up 0.2. Portugal up 0.3. Italy up 1.1%, and the Irish market up 0.4. Greece up 1.7%. So, a little bit up there across the pond, as they say. One of the other things we have is the Principal Financial Group, PFG. This thing's making highs. We're going to look at the volume, but it's 1 million shares already. Looks like this thing could get the 1.3 million shares from the previous high of June 18th. But we are above that range. Maybe this thing looks like it's going to continue a little bit further. I wanted to look at some of the other stocks. Mohawk Carpets. Of course, this is owned by Buffett. This thing really looks like either in consolidation or distribution. Of course, he bought this thing down for pennies on the dollar compared to the price it's at now. I would not be surprised if he started wetting his beak at the trough a bit here. But we've got a nice consolidation range from him in the mid 103s to probably the 120 area. This thing's a pretty light volume, about 3 or 4 or 5 dojis in a row. As it goes up against its previous high. I still suspect this thing wants to get to 120.70, which is the May 14th high, but really just don't see anything in the way of volume coming in. The last major high was at the June 19th high at 117.48, 1.2 million shares. The last 5 days, 655,000, 590,000, 685,000, 782,000. And it's going to be a light volume day to day, but not a big sign of confidence over the last 4 or 5 days. MMC, another one, which is Marsh and McLennan companies. This is one hanging out at these highs, like a lot of these stocks are, waiting for earnings. Going to be mostly the next 14 days. MMC, this thing went right to the highs. The previous high was May 22nd at 41.68, 3.2 million shares. It got to 2.6 million shares, and it's gone sideways since at 41.88. So it went a good 15 cents above, 15 cents above, and we've got just a very light sideways action since then. So a lot of these stocks we can see that are getting to these highs and finding problems really moving. Crosstex Energy, XTEX, this one's finding a high out here on lighter volume. It is pulled back in the trading range, but it set a high on May 29th, 21.89. 720,000 shares got in it with 470,000 shares on June 15th. Went above it. It has closed below it. So we are getting a lot of sell signals on these stocks, especially the ones that went up on lighter volume over the last week or two. Other companies that look like maybe they're finding some highs out here is Visteon Corporation, VC, of course, the car parts maker. I think it was a spinoff of GM, wasn't it? May 20th of this year, 66.49, 620,000 shares. Gets above it by about 30 cents on June 16th, but closes below it. And, of course, we've got a nice little doji coming out here today, but just a very light volume off this last June 24th low at 58.02. But what do we have for 7-8 days out here? Just a very, very light volume. Other stocks, I wanted to look at Rate, R-A-T-E, which is a bank rate company. This thing looks like it's popped back up, interestingly enough, but up against previous highs. The May 1st high at 16.15, 1.9 million shares. Get into it with almost 28% the volume on June 15th. Does almost a perfect tuning fork reversal signal on the next day, and of course it's down here with a lighter volume. But this certainly didn't like that previous high out here. Looks more like a trading range back down to this 13.05 low from the May 28th low out here. Anyway, you can give me a call, 877-927-6648. That's 877-927-6648. And throw me a bone. Give me a call.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, looking at the SMHs, of course, Intel after the bell tonight. Probably be a good indication about their prediction for the future, but is holding above the last high, at least at the moment. We've got a high out here at $39.28 on the June 4th high, 5.1 million shares. As we broke that yesterday, 829,000 shares, and probably going to end up with half that today, going into these earnings after the bell. IBM probably not going to affect this as much as Intel. Let's take a quick look at Intel. INTC, probably the still the premier manufacturer in semiconductors. Had a nice little bounce off the low here, but I think this thing could get back into the $21.50 level. I'd love for this thing to do that on a lighter volume, but that's pretty much where the support level is going to be and come in this thing. And probably not a bad company to have if things turn around. Right now, kind of the best or the least ugly in a beauty contest. But we'll see on that. Anyway, after the bell last night, a lot of companies in the credit card space actually had problems. What is it? MasterCard, Visa. What do we have? Basically came out, the European Union last night talked about a proposal for adding fees to debt cards. Right now, I forget what it was, anywhere from about 50 cents to about $1.50. They want to move that to about a nickel over in Europe, or have been talking about that nickel number for a while, and think that the companies can still make money doing it. And I think the cost of the transactions 2.5%. So they're saying a nickel would give you 100% margin. And they still like that 50 cents to $1.50, depending on what it is. Of course, a lot of them got hammered after the bell last night, but really not doing that bad today. Visa, they opened lower, but back in a nice support area. Doesn't look like it's done any significant damage. Why most of them were down this morning. They're kind of mixed now. Pet Smart, a place that I'm spending a lot of time at. We've been talking about the last couple of days. It had been challenging its September 10th of 2010 high at 72.75. 4.1 million shares. Got to 73.08 with 1.1 million shares. So 25% of the volume, and a nice pullback off of that high, and a little pullback today. Not a lot of volume just yet. I did not check when this earnings date is, but I'm going to do it right now. And it is, it's coming up, August 12th. So probably not going to find considerable weakness unless they pre-announce, but certainly looks like a lot of these stocks, which is up at previous highs, waiting for earnings, and not a bad setup there. If they disappoint, this thing looks like it's got $66 on it at earnings. I'm going to just check back in very quickly. We're up 4.5 points. So pretty much what I predicted last Friday, and that is probably a good week, at least to take a vacation, at least through Wednesday. And I suspect a little bit more tomorrow, since we've got Microsoft after the bell tomorrow night. Also, it is a week of expiration, and it doesn't look like there's going to be much out here to get anybody out of the way probably before Friday. But I suspect we're probably going to see a market that moves probably nowhere again till tomorrow, till we get those earnings tomorrow night. And then, of course, it'll be a few days before earnings really come back in a hurry next week, starting on Tuesday. And we'll find out what happens on that. But in the meantime, just looks like we're having a lot of nothing, and volatility continues to fall. What else do we have? Let's take a look at it. I wanted to look at Apple real quick, see how this thing is coming. But looked to me like they're trying to push this thing out, so it does expire somewhere around this 430 level. We're getting a little doji out here today, but Apple's, I think their earnings are actually coming up fairly soon. U.S. earnings, let me see. When is that? And see. Apple's earnings. What do we have here? July 23rd. Okay. So we're going to have Apple's earnings next week. That's the one I was thinking of, on Tuesday. So that'll probably be the next big move after Thursday night's earnings. So we'll keep a look at that. Now, see. And most people know not to call me during the radio show. I haven't had to really turn it off that much. Normally, I just leave it in the car when I'm in the office. Okay, I'm just trying to see if there's anything else. Altera is on Tuesday. We've got some big ones out here. iRobot, Kia Motors, Lockheed Martin, all next Tuesday. Norfolk Southern, Radio Shack, Samsung. I don't know if we'll have anything that would really move the market that looks vulnerable at the moment besides Apple on next Tuesday. VMware. Let's take a look at that. VMware next Tuesday. This thing has kind of bounced off the lows out here. Kind of interesting. It's back in the trading range. The May 1st low out here had 5.3 million shares. Been waiting for this thing to kind of pull back into this trading range. It did tend to break it with a lighter volume. That low was 5.3 million shares. It broke down on the 21st on 3.2 million shares compared to that 5.3 million share low back on May 1st. Since then, though, we haven't really pulled up with a lot of energy, and it's very light again today. What else do we have in stocks to look at today? NFX, Newell, Idea. I wanted to see a few of them out here. See if there's anything else. JCI, LMN, IYT. Let's take a quick look at that. The Dow Jones Transportation Index Fund. This thing was getting up, but it's still a little off of its highs. Looks like it does want to make a run for the 117.30 high on May 20th. Had just a hair under 400,000 shares that day. So we are going to look at that. But we're at 115.73 for the high for yesterday. Got close to it today. But I suspect we could still drift up there over the next few days. Johnson Controls, which reports here in a few days also, looks like it's getting awful close to its highs. Not a whole lot of energy either out here today, but 38.33 is the next target for this thing, and it's, 60, 70 cents off. So probably going to make a run for that. Let's see what else we have here. Lumina's next Tuesday, the biotech company. This thing did test its high and come back off already, but not backing off too far. A little doji so far today, but this thing spiked on May 10th to $77.11. 7.1 million shares went above it and closed below it on July 12th with 2.2 million shares. So don't expect a lot of these things to just roll out of bed here so close to earnings, but a lot of these things are kind of like Yogi Berra said, when you come to the fork in the road, take it. And apparently a lot of these stocks are at the decision point where these things are probably going to either break out and or fail and have significantly lower to go. Above, of course, who knows? Below, this thing certainly looks like it's got a giant gap that has not been filled, somewhere between the $60 and $56 levels, and a big disappointment out here could certainly bring it back to these levels. And what you don't like to see is this real light volume move back up to these highs, but we'll know next Tuesday on that one. Other things to be looking at out here. Google. I'm going to keep a close eye on that one. Try to find out when Google's earnings are here. July 18th, that's tomorrow. That's right, after the bell with Microsoft tomorrow. I knew that it was coming up. It is one that, again, it has tested the high, that May 20th high, 920. With 3.9 million shares, came in with exactly half on July 15th. And, of course, it's slowly been pulling back, but, of course, not enough time before earnings. My guess is that thing's probably right around 920 at the close tomorrow, and then we're going to be watching how that thing moves and reacts to earnings news after that. FRT, FPO. There's a couple of stocks out here that in this one I wanted to be thinking about. FOLD, Flowers and foods, FLO, which is 1-800. It used to be 1-800-Flowers, I think. FLO is the symbol on this. Another one that is right up here. It has not pierced the highs just yet, but just a few pennies away. So I'm watching this. But May 16th hit a high of 24.17 with 3 million shares. It's much into that candle. Another 11 cents away. Probably going to see that tomorrow if we have any kind of positive news. Got to 24.06 today, but just 640,000 shares so far during the day. Let's see what else. Let's see what we have. We've been talking about Facebook potentially setting up an ABC down. Another light volume move out here today. Did make a slightly higher high today, but still in the ball game for that. Facebook already reported, if I'm not mistaken, and their earnings are coming on. Come on, July 24th. So let's make sure that is right. Facebook, yeah. So that is going to be, what is that, next Wednesday. So this is setting up for an ABC down on disappointment, but again, too close to earnings on a lot of these stocks to start throwing the dice. ESI, another one that's been up here at these highs, the ITT Educational Services. This thing pretty much had rolled over. First high out here for triple high was May 21st at 28.37, 1.9 million shares. Gets into it and goes above it with 28.52 on June 12th. 1.2 million shares, goes right back in the trading range, and then we had 900,000 shares. Yesterday, this thing is pulled back fairly extensively. So, but volume really hasn't picked up just yet, and that's what's making me think that we've got a little time, even if we do think that it's time to go short. Earnings on this are the 25th next week. So what is that? Next Thursday? Yeah, next Thursday. So a lot of these are going to probably be hanging out and working off the highs over the next few days, and we'll be taking a look at them. What else do we have? Costco was kind of interesting. It was another one that was holding at these highs. No volume, going a little higher yet today. It's going against its May 28th high that had 2.6 million shares at 115.77. So basically started going through that yesterday with 1.3 million shares, and probably going to end up with the same kind of volume today by the end of the day. But again, breaking a previous high on half the volume, not the kind of things you want to do over time. And certainly this leg, while okay, just is not anything compared to the leg back up. Looks more like this thing could be setting up consolidation between the mid 115.16 area and the 107 area over time. It'd be hard for me to believe that the earnings were that fantastic to bring a lot to the party on earnings for that one next week. PLCM, Polycom, or it was Place. I think that was the one I was looking at. The Children's Place Retail Stores, PLCE. Been watching this one for a while. It blew apart last earnings cycle. Came down on monstrous volume on the 15th of, 15th of November. Came down on 3.2 million shares. Basically filled that gap over the last few days, starting to reverse out of here, but basically about 10% of the volume it had on that giant gap down. We'll be back in just a minute. Give me a call, 877-927-6648.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we have a caller, so we're going to go straight to him. It's Sam from Philly. How are you doing today, Sam?
Hello, Dave. Thank you very much. I'm doing fine. I want to thank you for a great program. This is the first time I'm calling your program. Okay. I took the trial on it, the art of timing the trade, and suffered on the first trade. It paid for my first month. The small trade paid for it. I want to thank you. It's a great program. I bought Tom's book, the original one, 6 years ago. But this does all the work for me. I want to thank you, and I do have a follow-up question, if you don't mind.
Okay, go right ahead.
If one cannot or does not want to short the stocks that I get from you on early morning, every morning, on the bearish Gartley, is there anything I can do to take advantage of a trade?
It is right now, of course, we're at these highs, and the answer is we're most likely going to do one of two things. We're either going to break out or fail here. So if you fail, you need to wait until they get back down to the next major low where they start to base out and then buy them back lower. Or you wait for them to break out and you wait for them to pull back and set back up. So the problem is if you don't want to go short, then you have to wait until the conditions improve and you go long. It's, having patience is a part of the game out here. Right now, we're at very high, at the highs with very light volume, but during earnings. And volume could come flooding back in again at any time. But even if it does, you're going to need to wait for a lot of these stocks to come back down to earth. We were talking about Intel, and just on these Gartley patterns, we'll see how they come back in. But let me type back in Intel correctly. INTC. I'm thinking this thing gets back down to this level around 21.5. Now, maybe a Gartley appears in it, maybe it doesn't. But it's the same exact thing. After these Gartleys appear in the market, they'll expire and then come back down and start forming new ones. But if you don't want to short them here, then you need to either wait for these Gartleys to get invalidated or wait for these things to pull back. Trying to remember what it was. Was it Ryland? RYL? I think so. Let's look at the Gartleys, and Ryland is a good example out here, I think, over the last year. Give me just a second while I pull this up. Okay, we're going to go through the previous Gartleys out here in Ryland, which is a good one to look at because this thing actually went into multiple Gartley patterns on the way up. And are you watching on Tiger TV by any chance?
I am watching.
Okay. You had basically two Gartley patterns out here, and these things can come out here. In this case, this thing failed on volume for the first Gartley that I'm showing right now at $43. Failed on, what was that? That was January 30th. Was the A point on the first one. Tried to get into that same candle that had 2.4 million shares on how much? 1.2 million shares. So you had a Gartley pattern. You made a bunch of money. You would have sold right there. Okay, but at the same time, this thing was setting up one more Gartley and did the exact same thing again. So these, especially some of these stocks like Ryland, you'll see that they go in from a Gartley right into another Gartley if the Gartley was good. So just because you're seeing these things maybe set up Gartleys at the top, don't be so surprised that you don't see those ones making Gartleys that are bearish right now go right back into making Gartleys that are bullish on the next cycle down. So I'd say keep tracking of those, and probably we're going to see the bottom and bullish Gartleys start to develop here shortly. See you tomorrow, same bat channel, same bat time.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.